Okay, I'm gonna try this out. So there's a lot of noise, but this is just me doing stuff to try things out. So just deal with it. So I'm gonna just give you an idea of when it's time to look at some portfolios of your bond funds, try and find some scary bonds in there. So I'm gonna use say ICICI, PSU, and banking debt fund. So no, there isn't a banking in PSU. So let's look at PSU alone. We might actually have something going there. Hang on, we should have something going there. So that's the internet is weird. So ICICI, Prudential, banking, and PSU fund now. PSU banking fund. Yes, here you go. You are fine, right? Okay, thing. So we're going to just quickly look at this thing. It's done interestingly well. This is about 1 year returns of 10.44. This is decent, but not so great because the banking and PSU debt as a category has done better. But more importantly, do they have something that are weird? Now, the answer to this comes from this kind of network. So you look at this and say, Government of India, fine. Government of India, fine. First four are fine. Then Exim Bank, again, owned by the Government of India effectively, so fine. Then you've got this 9.15% ICICI. But we're thinking ICICI Bank is fine, but wait, there's an interesting problem over here. ICICI Bank does not have anything that gives 9.15%. We kind of know that. But what kind of security is this? Isn't this something weird? And 8.85% HDFC Bank, 8.75% Axis. What is happening here? Okay. So I don't know if you can see this on the YouTube thing, but let's assume that you can. I'm gonna just quickly. I have multiple monitors, so I'm gonna just kind of see how this works. Um, might chop some of this off, but okay. So the interesting piece over here is that they've got 8.75% Axis, they've got 7.99% State Bank. It sounds weird, and again 8.75 Axis, some IndusInd banks, and this is the certificate of deposit. It should be fine, but there is something that's off over here because the rates look too high. So banks usually don't issue bonds except for tier one bonds. And these bonds can be quite dangerous, right? So let me go back here and say, well, we are at okay. Let me just move this into a slightly different area so that you can see this. And I want to just go to ICICI Prudential Mutual Fund. Um, okay. I know this is a test, so I'm going to just be a little bit more casual about how things do this. So here you go. And boom. So I'm going to add channel so that people can see this. Um, so I want to try this out. So I'm going to go to the ICICI Pru AMC mutual fund. Now we found that some of these things are weird. So let's go and try for one of these things. So let's just try and find their mutual fund portfolio disclosure. So it's not usually easy to find, but maybe they're in fund fact sheets, maybe they're in something, but they're definitely there in one of these downloads, right? So let's go to the downloads and then look at maybe their monthly portfolios, fact sheets perhaps, or market updates. and they might have something. Well, you can't find them easily. So let's see if we can go in ICICI Prudential Mutual Fund monthly portfolio. And if we can find these, then we might be able to use that in a meaningful way. So if I can do this, I have portfolio documents. There's a hard, okay, disclosures. Disclosures usually has something interesting. Monthly AUM disclosure, and this might actually be this is an AAUM, so this is not it. Okay, where is this? This is not easily available, so I'm gonna have to really find something. Um, Here you go. You and the problem really is these funds don't make it easy, right? So you've got to kind of hunt around. So I'm doing this live. I haven't done this before for this particular. I mean, they've changed the website as well. So let me see if there's a fund fact sheet for November that we can use. Is this any useful? The big lot of downloads happening, so we've got it's a PDF, so we can't figure out things. So this is not worth it. Let me just go to others, and maybe then you'll find some interesting things. Monthly portfolio disclosure. There you go. Finally, oh, this is so painful, and everything changes. So this is going to be a PDF or an Excel file. In this case, I think it seems to be a PDF. No, it's not. So let's open up the debt fund. I'm going to drag it to the screen because otherwise it will appear. Oh, here you go. It's on the screen. So if I were to do this, I would go in here, and I don't know if you can see this, but I'm going to increase the size so that you can. And I'm also viewing this on another monitor so that uh, you can actually see whether I'm doing the right thing. Okay, so if I were to actually increase it to this size, maybe you could see this better. Okay, so we've got a bunch of government securities. Then you've got state government of Tamil Nadu and all that. So this is the government security fund. They're okay. There is the non-convertible bonds here. Now, additional tier one Basel 3. This is where the problem is. 81 is interesting. You've got HDFC Bank, you've got Axis Bank, you've got Tier 2 in State Bank of India, you've got 81 for Exim Bank. Now, Exim Bank, I can still say, okay, well, owned by the government of India. You've got Axis Bank 81s, you've got ICICI Bank 81s. All these 81s are all fine until one of them turns out to be a problem like Yes Bank, right? So, or if it's not even a problem like Yes Bank, if there are enough problems in the industry that the RBI tells them, listen, we can't allow you to pay any thing on these 81 bonds. Now, let me show you what it means to have an 81 bond. So, let me go back to um, our presentation, and then we'll just quickly go into www.indiabondinfo.nsdl.com. It's a simple website, so you can see this. I'm going to type the ICN of one of these 81 bonds, right? So you've got something in there, and it's a lot of interesting things here. You've got 9.15% listed subordinated non-convertible Basel III compliant bonds. These are perpetual. They never have to pay you back. But there's typically a call date, and that call date will be sometime in the future. As annually, they'll pay you an interest from every year. There's no end date, so you can keep going. You got a call date in 2023 when they are supposed to be able to say, listen, I'll pay you back your money, and you give me the bond, and we're done. So it's a perpetual bond, except we have this particular detail that kind of works for your favor. Unfortunately, what we don't really understand what 81 bonds mean, and the issuers, you won't actually be able to see these documents. But I'm just going to search for, say, an in additional tier one bond offer document. So I will show you what it means to have some of these additional tier one bonds. So DSP actually has a very interesting thing where they actually maintain this in their this. These are tier one capital. Now, how can a bond be capital? Because capital is equity, right? That's the idea. The idea of tier one is you are actually giving bank capital, and the bank is giving you back a bond. It's not a bond. It is just a fixed income instrument, which is like equity. So in the sense that you have the risk of equity, but the return of a bond, which is the worst of both worlds. That's why they offer you these 9% and 9.5% and so on. Your issue is your mutual fund owns these bonds. And if something goes wrong with the whole 81 architecture in India, it's already going wrong, right? So you'll get people coming and beating you up because you can't sell these bonds. Once things start going bad, nobody will buy them. So you have a risk. This risk is really that they can skip interest payments for a particular year or reduce the bond face value if their capital ratios fall below certain levels. Also, if the RBI feels the bank is on the verge of insolvency, it can just ask the bank to cancel the outstanding 81 bonds. This happened with Yes Bank, and Yes Bank is a surviving bank. It's a perfectly functioning bank. I had my deposits there. I'm fine with it. You had an 81 bond, you got zero. That's the problem with an 81 thing. It can be a bank works, continues, rescued, whatever, your 81 bonds go to zero. This is a big problem. And the RBI has protected this thing, so it does not allow the commercial bank to fail. And before it were to fail, first thing that will happen is cancelling of bonds. Lakshmi Vilas Bank failed in the sense of it had to be transferred to DBS, but yet you got people telling you this was not the case. It's no longer going to, be allowed. So this is the tier two bonds of Lakshmi Vilas Bank got written on to zero. They got nothing. And the depositors were fine. Even the shareholders were okay. They didn't have to do anything. Oh, no, shareholders were not okay. Shareholders went to zero as well. Shareholders went to zero. 81 bonds went to zero. Depositors rescued. In Yes Bank, 81 bonds went to zero. Shareholders rescued, and so were bondholders and depositors, other bondholders and depositors. So this concept called 81, this is how you find it. You have to literally go and download the actual underlying portfolio, which, like I told you, is in their bonds. So this is the banking and PSU fund. You've got a bunch of 81 bonds. Luckily over here, they've told you it's 81. In some cases, they will give you the ISIN. You can identify them by their high interest rates. If it's 9%, you know it's an 81 bond. No bank will give you 9% on any bond right now, right? So if you look at state, they have a lot, man. They have like the SBI, they've got, so this has risk. There's ICICI Bank as well. There is Bank of Baroda tier 2, State Bank tier 2, and all of these things hedge on the, or rest on the assumption that these banks will call in on those call dates back those 81 bonds. Does not take into account any factor that can come in where the bank can't call it or RBI says the banking system is at risk and you're not allowed to call these bonds. It doesn't take into, and this is your money, so effectively, because the mutual fund is not going to assign itself the risk. It's your risk. If anything happens, you lose money. So this is one way you can find some problem bonds. Beyond that, of course, there'll be others. And let me look at quickly things. So, for instance, you may not recognize some of these names. Reliable Devices Trust. This is actually a trust created by securitized trust created by Reliance when Reliance, I think, retail when it sells something. There is, of course, a bunch of other things like swaps. But go to some of the other bond funds, for instance, let me just go to their medium term bonds, and you might find something in here that is not very interesting or that's not very recognizable. So, for instance, the highest rating here, highest holding here, 6% is held by this bond called Coastal Gujarat Power. You have no idea what that means. So let's go here and just do a quick search. I have not done this before. Okay, so this is the first time even I'm doing it. So I'm going to go to India Bond Info, and which is here, and just press refresh with the ICA, and I will get um, uh, yes. So interestingly, yeah. So you got a care AACE. Now anything with a brackets in ratings is a problem. I mean something is going on. We don't know what that something is. You've got to find out. Who are these? This is the Coastal Gujarat Power Limited called CGPL. We have no idea whether it's a government company or not. We'll find out soon enough. The coupon rate is 9.7, so high, but this might have been done a while back. So it was allotted in 2018, just around the crisis time. So 9.7 sounds fine. That was the minimum we ever got at that time. This is guaranteed by Tata Power. That means it's a Tata Power subsidiary or something. So you're betting that Tata Power will not default. Remember, 1 year ago, Tata Power was on the verge of default. They wanted to get out of their life. They wanted to sell the company at 1 rupee. So there is that risk that that could happen again, and therefore your bond is a risky bond. So again, I'll go back to the debt thing and say, okay, that is interesting. MTNL, government company, should not default, but it could default because of anything else. GMR Air Cargo in a medium-term bond fund. Is this of any use? Now let me just show you what it means by Coastal Gujarat Power itself. Okay, let me not do that. Let me go back to this fund and then we'll find something else. Let's look at Vedanta. So many of these things are bracket CE. These are actually bonds which are perhaps the rating is based on some kind of guarantee by somebody else. That's why it's in brackets CE. So we have no idea what that is. So Pune Solapur Expressway. To give you examples for that, now Pune Solapur Expressway is not a bad company. I have been on the Pune Solapur Expressway. It should be fine. So if we were to talk about that and say just write credit rating, when you do that, you'll actually get an ICRA credit rating report. This report confirms or denies whatever is happening. This is a company that is, let's see who the company is. We just go down a little bit. So this is an operational road project. There's a traffic that grew at 4.46. Just remember, this report is actually 2019, I think, quite a while back. So pre-corona, it was in great shape, and things were good. There was a healthy cash cover. There was some O&M expense, and there was some, we don't know whether the rate will get hiked. Um, so this is actually being funded by this, and there's 100 crores in various reserves. So that way, it's likely to be paying everything back. However, it is promoted by Tata Realty, which I don't think is given a guarantee on this, but we don't know per se. But maybe we can find out. That's more inside. But what's more important is to go to ICRA and actually find out what the current rating of this company is. So if I go to ICRA today, I can go and search for what is that thing? Pune Solapur. So here you go to Pune Solapur Expressway. That in Google might have been an older report. So has it? Yes, it has changed. The rationale has changed. So from November 2019, we've got a new report on 28 September 2020. So let me just show you what this means. They have a guarantee, they have a corporate guarantee, um, and they have double A minus. So it probably fell a little bit from the earlier. So if it were not there, if there was no credit enhancement given, they would have only rated an A. This is interesting because that means things aren't great. This has fallen from, so if you look at the fund itself, in your medium term fund that is in they say that the Pune Sholapur is ICRA double A. CE, right? But if you look at some of the non-convertible debt, it's for double A minus. In one case, it's double A, and in one case, it's A. So we have no idea which one it is. I'm assuming it's one of the ones that is rated double A here. Maybe this one. So this is kind of guaranteed debt. So what is happening here is that you have a corporate guarantee that's been executed, then that Tata Realty will kind of guarantee the debt, I think. That's what they say. Um, so this is very interesting because you're betting on a guarantee that something else will happen. On account of the COVID pandemic, we've got this, the traffic flying on the projects which has been adversely impacted, and we've reached 85% of average collections. But since then, so in August 2020, we've reached over 85% of the average collections, which means there is still a 15% lower collection than compared to earlier. And then we don't know what else is going to come in. So what's happening here is that you have the strength of Tata Realty Infrastructure Limited. We have no idea how good this company is, but this is the one that's going to guarantee the report. So you're now looking at, okay, so there is a bullet repayment in March 2029. That's a lot of this thing. So there they're going to pay one of the bonds is going to pay a bullet repayment and March 2029. We don't know which one that is. Um, you can actually see now whether there are any challenges to this. So if this isn't this seems to be fine, but it does depend a little bit on Tata Realty. If anything happens there, we know that there's going to be a problem. So that is one of your largest holdings in this particular fund. Um, and you got Jajjar Power, for instance. These are actually also quasi guaranteed. There's Vedanta Limited directly, which we have seen bonds fall quite substantially. So to give you an example of how crazy it is, if I look to bonds traded today, I'm going to just quickly show you what this means. So if I look for Vedanta, Vedanta Limited is trading at a yield of 11.5%. This is very high in a time when everybody else is able to raise a 3.54, 4.55. You're talking Vedanta trading at 11.65, 11.64. It's not raising at, but of course they're trading at. Whereas Reliance Industries, this is relatively new. This is April 2021. You're talking about a bond that is 4 months away from maturity. It's December 2020 right now, and it's trading at 11.5%. A similar bond from Tata Capital, just to give you an example, that is in 2025. That's 5 years away. Is trading at 6.9%. This is ridiculously low. I mean, but you can see that everybody else is trading at so much lower levels, and Vedanta is trading at 11. So there's another risk over here. So this is the way you look at bond portfolios and say, okay, where's the risk? Risk in Vedanta, I'll bold it, and then let me just leave the editing. So I'll just say, oh well, you know what? I don't like this. I'm going to put a red mark to the Vedanta here, and then I have a bunch of others. In fact, one of the things that I find safest over here is probably Muthoot Finance. I don't think anything has happened there. But there's um, Valvan Renewables. We don't know who the background of that is. That might actually be something else. We have to check what that is. So State Bank of India, additional tier ones, could be again in the medium term fund, could be a problem. We don't know. This is also an issue. There's Great Eastern Shipping. You got to check that as well. You've got a lot of risky debt here. So just a quick summary over here is that, yeah, you could look at this and then you could, there's bunch here. So for instance, Magma FinCorp has a securitization trust. This is AAA. We don't know how this has performed or how it is. So let's just see whether this is something that is rated. So I'm going to copy this and go to Google and say, I want to see where this is. So this is rated by Chrysler. Now, this is a securitized trust. So you could find that there are other issues with Magma FinCorp that has things. So let me just see if I can find something that was there in October that we can look at ABS and MBS pools for 2020. So we've got ABS and MBS pools. So many of these are asset-backed securities. So you got October, we don't have November, so that is a big problem. But we could, in fact, go back and just say, well, you know what, I don't. Maybe we should check this um, in here. So yeah. So we've got, there is a, what was it, MFL Securitization Trust. FL Securitization Trust, and they're very different ones. The ones we have in this portfolio is actually LXII, which is some Roman thing for something else. So let me just search for LXII, and there you go. And you got a view, so you can see what the facility is, which is you got a series 2, a series A1, series A2. We don't know which ones these are. We have to check for each of those. It's probably one of these. Um, and okay, do they have a link to any of them? No, they don't. So we may have to check the ratings. We can't check the ratings. So why can't we? So we currently can't. So okay, let's see if this comes in. No, well, this not have this. But sometimes you can actually find the thing. I'll show you what it means in October 2020. So, so you look at the IBS and MBS pools here, and you can go click download, and then you can search for if you search for LXII. This is the MFL securitization tech. This is interesting. They have 73% new assets, 27% used. That's the pool characteristic. So this is quite interesting. Their overdue composition is they have no overdues as of October, which is awesome. Credit for the collateral. So this is also quite interesting because they have some part in the liquidity, some part in first loss facility, some part in second loss facility. So if there's any losses, I think about 7.8% is taken care of. Um, and if I were to say LXII again, they have a collection ratio. This is what we care about of 98.6%. This is okay. This is very good actually. So no issues. This personal vehicles, commercial vehicles, and I think commercial equipment, but I'm not sure. So this is the pool. The pool has so many things in there. We've had about 20.2% prepayments, which is good for credit risk, bad for interest rates. And the total collection ratio is 51.8%. Very stable. I don't think this is a problem at all, seriously. But you could find others. So I'll show you something like it's called Secure Trust. The same thing which is there in in that particular thing. The pool performance has a collection ratio of only 40%, not 82, and you've had a very little 7.6 percent collateral as a percentage of future payouts. Uh, so, and total collection ratio is recent, but overall, so far, it's a relatively new thing. So it's April 2020. So you've got to be careful. The vintage is much lesser. This is just gold loans, and with the collection ratio of only 40% versus almost every other gold loan is sitting in at 92, 93%. These are specifically IFLs. But if you look at Manappuram Finance or anything like that, they're all at 90, 95% on gold loans. So that's what you've got to be careful about. Okay, so that's it. We have a bunch of interesting things you can see. You can see a bunch of portfolios. We hope this helps you because one of the things that you don't understand is how complex data is sometimes, but this is the way you look at risk. As an advisor, you want to see this on a regular basis. And then some of these will be fine, like I don't know, I don't even know what this is. Bangalore Airport Hotel. Is it backed up? Embassy Parks RAIT. We know this is good, but remember this is the debt part of it. So we don't know what the yield is, but that's that's the thing. And then you've got Patel KNR Heavy Infrastructure. This is actually to the company that builds. That is uh, a combination of this Patel and KNR constructions. But I think the Patel part is having some trouble. So not sure where that goes. There's also a bunch of others. There's IRFC, which is fine. There is Pune Solapur, where we might find okay, I can take that kind of risk. But you've got a bunch of others. There are lots of highways in here. There's also a bunch of power companies. And remember, highways, power, infra is this is where we are, and we are in business here. So this is what the concept is. Would love to hear what you think. Come tell us in Slack what you might find interesting. I will get back to you with more details as we go along. I hope this helps explain. Just quick explanation. I think quick I said it's half an hour, but thanks. So I have to go here and stop streaming.